Hello folks, it's Fed Day here at TA Today, and I thought I'd do something a little different in the macro view, and that is take a look at what probably is going to be the result of whatever it is that the Fed says today. So let's pop in here. I want to look at the currencies and look at the bonds, because those are the ones that usually tell the story as to whatever's going to happen with the Fed. So if we look at the euro, for example, or as an example, and pop down and look at this trend, I mean, it's been straight down, right? And no matter how you draw any kind of support resistance, ABCD structures, so forth, this thing has been a nightmare for anyone that was long the euro. If you're long the euro, you've essentially lost, in the last, from here, which is basically 2 months, you've lost 10% of your value at a minimum. So the euro straight down, but what does it do? Gets a big volume spurt here, lower volume there, rises off of it. Euro looks like it's going to settle out here into some sort of a trading range, and that suggests that somehow, some way, this Fed's going to say something to keep it from going lower. Why would it go lower? It would go lower if the dollar got stronger. And the dollar, of course, is a function of Fed policy. The dollar has been getting stronger, as you see here, because the Fed is signaling that it's going to raise rates versus all the other countries in the world lowering theirs. Big spikes on the way up, pullback. Yes, this could spike back up, test the top, but folks, this looks like it's done what it wants to do, and also wants to build out some sort of a range like it did once before up in this area, from those highs back down into these lows. So if I look at the dollar, if I look at the euro, look at the yen, all of those, they're all suggesting some sort of sideways, coexistence, if you will, after a big run. That says to me the Fed's going to say something to take the edge off this dollar and to try to make this dollar come back in. If I look at the bonds, it's the same story over here. In each of these cases, these markets are telling us that something is going to be said that's going to drive these prices back the other way. Drive the dollar down, drive the euro, the yen up, drive the bonds back down. Not huge moves, but back down. Failure here, you get over this price point here, you get over it there, you get over it here. Every time they sell it off. In today, they're selling it off. Look at the way the bars are lined up in terms of color. They're dark bars, they're dark candles. That means that the sellers are in control at the end of the day. So they take it up, sell it off, take it up, sell it off every day. This thing's going to come back. It's going to trade back into this lower range off this bar, which is here, and that's where it's going to trade back to. So again, we're not talking about huge declines, but the Fed's going to say something that is going to make this market flip around. That says that it's going to say something about or suggest somehow that those rates aren't going to go up when people think they are. If that's true, I would expect the bonds, the dollar, all of those to signal equities to try and go higher. So that's kind of the read here today. I thought I'd share that with you in the macro view, which is usually not what we do, but worth doing.